You're a bitch, Joe. Welcome everyone. How you doing? What's up, Ty? Good to see you. Sushi Norbert. Oh wow, we got Needle in here. How's it going, Needle? Oh, let me check. Oh, rough. Yeah, we're gonna talk. We're definitely gonna talk some AMD tonight. It's a weird one though. I mean, we'll get into it, but so far failing the uptrend pretty heavily. But after all this consolidation, selling down to these lows, pretty easy one to want to get long on, in my opinion. But we're gonna talk about that with trends. What else did you say? Meta. And I like this one. I mean, I wish I would have hit it today. Um, but whatever. We'll see how it goes tomorrow. But easy. I mean, pullbacks that 158, a 158.20 area and stop like a buck 50 below you. Easy one, little risk. And Meta has just been, see, yeah, Meta doing as expected. This thing trades real technical. I never really hit it. I ain't getting long Meta here though, I'll tell you that. Yeah, I guess you could try off the 500. I am also not getting short Meta here, but I loved Meta short yesterday. Going over the consolidation on Apple, no such thing. Like, blast it. I mean, unless you want to talk, but it is kind of crazy when you really look at Apple. Look at that, man. 2021, even further back, really 2020, man, we were from 120 to 200 for years. Apparently a calculator and a pencil or something will send you flying. Welcome everybody, how we doing? Hope everybody had a good day. I like AMD though. Yeah, I mean, meta intraday, you could try to hit it short to 500, but with how this thing moves, I mean, I'd rather not be short here. Just trying to catch that $4 down to there. I'd rather wait for some strength to maybe show back up and see if we can hold that level for a couple days for another push back up to the highs, or wait for the push back up to the highs to short again. But risk with that is, this is actually a nice one. We should talk about this one too. Risk with that is, those highs, bunch of failed breakouts there so far. So, if you short it, it might work. But after it's tried it, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 times, one of those is going to pop and stick. Yeah, not to me. I mean, I still think over 510, you got that 514 right there in the way, at top of range. Because if you're getting long here, you only got this, That's why, and we'll talk this one here in a minute. Because why not? Love people bringing things up. Like really, the ideal entry on meta is going to be another pullback way down here. Not saying it comes, but boy, oh boy, that's a place to be long on meta. That's for sure. It'll probably be about the time everybody thinks meta is going to die, So take that third test on there, and that thing will get to flying. How's everybody doing? Did we all have a good day today? Fun day, I hope. Yeah, man, all of those companies just scare me to trade, man. Buy it down there, maybe. Yeah, it did kind of bounce this original top. Rudy, how we doing? Husky. That thing got working for you, right? I don't remember if you said that 513 crossover. Nice. It was a good one. I was actually because we're gonna give it another couple minutes. We only got a few people in here, but it might, we had 110 last night. So I've been, I have a few charts on my screen. This has nothing to do with tonight's lecture, just to let everybody know, but just to show somebody because their studies I've shared. So there's we got a blank one. We're gonna get rid of these. So one of the one of the studies and one of the combinations we've talked about in the EMA class and stuff, and just things that I like are this the 5 and 13 EMA. And I really like those for crosses. It's something that, it works really well. That's what, if you ever see me post this chart, I won't post them often just because I don't like to think of these as signals. But what these are is merely just these EMAs crossing, either, getting that 5 below the 13 could be signaling switch to bearish trend. Over the 13 could signal bullish trend, but as you can see here, this ultimately failed. And then again, this one might have worked. This one did work nice in the end. It's never something that you want to use exclusively it. But another one of the studies that I've shared, and this is from a guy in here, Assassin. He's got a couple names, Assassin and Infinity Market Analysis, something like that. He's the algo guy, posts a lot in Advanced Trade Floor and things like that. So he, as you can see, I have multiple things from him. He has a cloud study, ribbon study, whatever you want to call it. And I like it. I don't like the Ripster ones very much. I don't like those ones that kind of change colors because they, they'll change from green to red. I don't personally, or red to green, whatever. I don't personally like those because it's something that can just build, bias. You see it turn green and all of a sudden you want to start buying calls. So I love this Assassin one for, you know, the main things that it tells you is like, if this thing is widening, then there's volatility coming into it. If it's getting narrow, there's a little bit less volatility, you know? And so I like to use these two in conjunction. And so it was something that today I used it multiple times. This was the first one. I took this short this morning because, you know, we're giving up the EMA clouds, which it doesn't matter. I mean, if you had the 9 and the 20 up there, any of those, you were picking this same thing up. But giving those up, as well as having that first 513 cross after a nice little, you know, not a huge uptrend, but a nice little $1.50 uptrend in that pre-market, this was something that just showed that cross happening very, very quickly. And so it's some, you know, this is just, I always like to show people other examples, show people things that they may or may not want to use. And so this is just a really cool combo if, you know, nobody's ever used it. Again, as with all things, you know, they can have fake outs, like even this one right here. We talked about that earlier, 513 cross, also breaking above the EMA. Did it provide a scalp? Definitely. But it didn't, you know, keep that follow through. We had nice big buying on that breakout candle, just followed by instantly reducing volume. And the next volume that came was seller volume, obviously. So never, you know, nothing like this is guaranteed. Like, you know, if this is all somebody's watching, you know, is a couple of EMAs, then you do kind of want to be slightly careful listening to what they have to say, because these things are rife with fake outs. But this is a sweet combo. If anybody wants to try it, I think I got them all pinned in my tab, or if you want them, just shoot me a DM. And pretty cool little thing, makes it visual. I like visual, you know, makes it easier for me to see. Okay, with that, we are going to get into this. Welcome everybody, Dirty River, happy to have you here. We are going to be talking trends tonight. You know, it's awesome. Like I said in the post, you know, when you're able to catch a trend or catch a reversal at a really, really nice point, it's just a satisfying feeling. You know, contracts typically are not going to, if you're trading using trend lines, your entries are going to be typically pretty dang good. And then, if you do have to stop out, your stop out's going to be really tight, which is nice. And then on the good side, if you are able to get into a trend nice and early, and we're going to kind of, you know, talk about some ways to potentially identify trend reversals early, those kinds of things, as well as how to manage in the trends. We're going to look at long time frame trends. We're going to look at short time frame trends. And, you know, we talk about it all the time, and, you know, you know, the one of the main questions that we are asked is, you know, how do I hold my trades longer? And as most of you know, I'm a scalper. I don't like holding trades for a long time. Give me, like I always say, give me 520%ers to 100%er that takes all day and goes green to red. You know, that's just not how I personally like to trade. I like fast in and out sort of trades. And so we're going to talk about really riding a trend. How do you hold a trade longer? And how do you hold a trade longer based on the chart? You know, this trend lecture is going to go a little bit into reading price action. Obviously nothing super detailed, but some things to look for when, you know, looking to enter a trend or trying to catch a trend early. And so with that, we're going to get into it. We're going to start on some longer time frames. You know, we're going to cover a bunch of stuff tonight, but my hope is I'll try to get through it pretty quick, maybe 30 minutes or something like that, and try to leave us 20, 15 minutes at the end where we can, you know, I'm trying to do it in every lecture, discuss some trade ideas. And then final note, as everybody knows, this is, and I forgot to write it in my thing tonight, but as everybody knows, I've been doing my series lately, just kind of trying to cover everything that I like to watch while I'm trading. And then I'm going to get it all pinned in my tab, and it'll be easy access. So if, you know, and of course, always feel free to ask me questions, but if anybody has a question on, you know, how would I view this trend? You'll be able to pull up my lecture really quick for my tab on trends, and hopefully get the information you need. And so with that, we are going to start, like I said, long time frames. I think all analysis should start on a long time frame, and, you know, longer than the hourly. You know, the hourly chart's good. If you're really trying to analyze what a stock is doing, where things are going to go, where is it trading in relation to other things, you want to be on that 4-hour, that daily, sometimes the weekly, but the weekly can even be too condensed sometimes. That's why I think that 4-hour and the daily are two of the really most powerful tools you can have. And so we're gonna start, I have SPY up, but we are gonna start with SPY. And we're gonna kind of cover, how to identify trends first, because that's what I get asked all the time. How do you draw your trends? And so trends are really interesting because they they can be as few as 2 candle touches. That can be all you need for a trend to be a trend. Sometimes they can have 10 candle touches. And what do I mean by a candle touch? We have a little trend right here. This trend is, as I said, this is 2 candles. That's all this trend right here consists of. Even, if we do want to drag it way out here, we still haven't visited that trend. Don't, we will eventually, maybe sometime, but I'm not hunting for it. But this trend for now is 2 candles. So what can we gather from that? We can say that that price is being defended very well so far. If we start to get a third touch, a fourth touch, that's where we can start to say to ourselves, hey, maybe this trend is going to break to the downside. This is a really common market thing where, we sold, we took a bounce. We now have 3 heavy days of selling, and if you aren't paying attention to trends being set, if you aren't paying attention to where you are in the chart, you might see candles like this and say to yourself, oh, I'm getting short. Well, if you zoom out, look at this big picture, look at the trends, even zoom out a long ways, you don't really want to be short. So a trend is always going to be a place to find a really nice entry. On the other side of things, this is one that we talked in class last week. XLE, the energy sector. For anybody who doesn't know, this is the energy sector. They basically hold a whole bunch of gas companies, some solar companies, or they're technically gas companies that are involved in solar. This is one we talked last week that we were just touching on, saying, very, very bearish chart right here. Multiple trends going. That's why I'm pulling this one up. We had our original trend was this is where the trend up reversed down. So now, how do we know where we want to draw the trend? We want to look for a lower high. And we're using XLE because it's super obvious right now on this chart. We have a lower high. What do I mean by a lower high? This high up here is high. This high down here is lower than this high. That's simple. Like that's all we are looking for to draw a trend. So then we come to XLE and we draw our trend. This is our first touch on it. I got a little shifted up here. And I try to be accurate on these. And I draw them on wicks. And, I'm not going to say there's, you should draw them on wicks. You should draw them on bodies. And when I say I'm drawing them from the wicks, I'm drawing them from these wicks on here. And why do I draw them there? Because that is where we know one side gave up. We can look at this candle right here and say, oh, market opened right here. And that's great. It is useful information for when you're trading. If you're, trading above the opening price, you can obviously kind of be looking long. However, when we were bought up here to this high, this is where sellers showed up. And, market opened here and it pushed green and then it got absolutely clobbered. And so I want to know, where did the sellers show up? Same as here. We now have a lower high established. And you would really draw it after this day. This day would happen, and then you would let this candle form and say, okay, this is now a lower high. So we have our lower high. Well, how do we use this trend now? When we have this lower high established, we know that statistically speaking, we want to be short at this trend. Statistically, it's not going to break on technically the second attempt to break. It's not going to break here, statistically speaking. If it does break, our stop is very, very tight. So this is where we want to get short. Obviously pays you really nice. Again, if we come to this trend, the risk reward on these trades, people will be trying to catch these breakouts. 9 out of 10 times, you are better off shorting the trend. We can see here, we got a nice sell again, would have paid some, attempted the break of the trend. This is where it gets a little bit interesting on daily timeframes, because this is our established trend. However, with what we've been learning about trends, this is now technically the lower high because, this high's up here, and then this was a lower high in relation to this trend that is now broken. So that's another thing we can do as traders. I always recommend leaving both trends. Don't adjust trends to your bias. Only draw a new trend when something dramatic happens. And so we have a trend here. So now we know we're super downtrending. We want to be short in the energy sector when something like this is going on. Again, nice sell off of there. We wouldn't identify this as a lower high until this candle forms. So we wouldn't necessarily have a short opportunity on this candle. And I don't like an entry here. You can try a short down here, but now you're starting to chase those downside moves. What I do and what I have been watching on XLE and recommending to other people, wait for another lower high to be set. And so, this trend is not giving us a bunch of information right now. This trend is now giving us awesome information. So how do we use this? There's people out there looking for falling wedges. There's people looking out there for all of that. Now we know we short any bounce up to here. Very obvious short. We had this level before it came. We see it breaking this trend. We assume it's not breaking this trend. So this offers very, very excellent short opportunity. This is just a nice downtrend that we have going on in the market right now. And so it's somewhere, it's something that you can look at for potential more shorts if we get bounces up to there. I do want to point out, I don't know if he's in here because it was something that I hadn't noticed. I am bearish on energy right now. I think as most people should be with how the US, what they announced, I don't know, whatever that was a week and a half ago about, we're going to start producing more. We're going to start depending less on other places, and we're going to do everything we can to keep our gas prices down. That basically tells us, hey, XLE is likely going to sell. And so one thing that I do want to take note of and, have people take note of so that you aren't just diving in, short on these things, and shout out 1K if he's in here, where we bounce today. This is the 200 SMA. So when we sell down to that, we know that that is a very, very important level. So if we get a little bounce up to here, I'm not going to be shorting this, knowing that that 200-day is right there. I would feel comfortable trying to catch a volatile breakdown below it, but I don't see the risk reward in the trade of getting short here. However, another push up to here, in a couple of days, and I'd love to be short back down to this 200-day with a stop over the trend. And so that's XLE, just some analysis on trading. And this is a friendly, easy to trade downtrend. The next one that we're going to talk about is actually going to be an uptrend. I obviously want to bounce to that next. And a very different uptrend. This is, very gradual, slow moving, controlled selling downtrend. This is like, I'm not a huge, manipulation guy, but the oil market is pretty manipulated, so it tends to be very controlled selling. It'll be like, just strong grind up buying. Like that's how these things move. Let's see if we got any questions. Sushi. Yeah, ask about that support and resistance thing at the end. Because that will be, we can kind of touch on that, and we're going to get, as we talk more and more in trends and we get to the intraday stuff, we're going to kind of touch on that, but we're going to be discussing trends, which, one way that I describe trends to people is think of them as support and resistance on an angle that's ever changing. We know this trend, if we're buying up to it, is resistance. Obviously there was people trying to play this break to catch these bounces, but like, there was no buying going on. You didn't really want to be getting long here. But we'll touch a little bit on supports becoming resistance becoming supports, discussing trends, and hopefully you'll kind of grab onto it from that. Yeah, Rudy, that's another good point. If you're like me and you like to be bullish, I should talk about this on this thing, even though generally speaking, and, this is just my opinion, if something is trending up, try to be long on it. Don't try to catch tops and short it. If something is trending, or, if something is trending down, don't buy calls, wait for bounces to short because the trend is down. So you always want to go with the trend. However, XLE, and I wasn't going to talk about this, but because you brought it up, Rudy, XLE, obviously in, depending how you want to look at it, a nice down channel. So pushes down to here can be longed, but it's just not the trade for me. Obviously, if you had drawn it on here or on here, you can catch some bounces, no doubt. But for me, this is just, I mean, this chart is a chart to be shorted for now. But that 200-day shout out 1K, if you're in here, good eye on that, because that can be the turning point to make these things want to get running, but we'll see. So next one we're going to talk about, very different type of uptrend. It, you know, I'm calling this one an uptrend. This is something that, you guys know I love Al Brooks. This is something that he would call a strong bull channel. And so what he means by that is that we do have two trends working right here. It's tight. It's all buyers, it's all buying. So we have a very nice tight bull channel right here. For me, I'm mostly concerned with, when I look at this chart, there's a few things that I'm concerned with, or not concerned with, but care about. Obviously, first one, gigantic earnings gap. We're buying into it. Strong trend up. And then really the level that I care about on here is right there. That 64.18 level, that's the level that I care about. We have a very strong channel. Well, now we've pushed, we've broken, we've had some of that increasing volume. We'll see if we get a nice little pullback to this trend over to here. Like, I'm long on SHOP if we consolidate for a couple of days to here. I'm long what stops below it. But what if you saw this reversal? How could you go about trading this? And so for me personally, and Tilio was in this, Toasty was in this, so this is something that I've been watching a little bit lately. Not trading it, unfortunately, missed the move, but been watching it move, been moving really nice. Main thing that I'm going to take note of is, obviously, you guys know me, always ranges and trends. So we were forming a nice range right here. Offered a great entry. We didn't know this trend was here yet. But to me, beautiful entry down here, no brainer. Total reversal candle, great one, bottom of the range, great place to be entering. However, we don't know that this is going to be the reversal. So maybe you don't want to take this because, like, look at this. There's no denying that SHOP is clobbered when you look at it right here. But those are the kinds of things where you want to start looking for the bottom feeding trades. I mean, this thing is smoked all time, of course, but very nice entry down here. Well, with our trend, we have a low here. You technically could have drawn your low up to here, or your trend up to here, but it didn't give you much information. So what we really had to wait for was this. And so why this one? And I'm gonna zoom in, and this is like being very technical, but it's just, and I should even adjust my trend so we're even a little bit, a bit more accurate there, somewhere around there. What the reason this is the trend is, and this is again a super technical thing, just something to take note of. See how this low is lower than this low? That to me is the first real higher low, because we were just pushing. This was the first pullback we got. So once this came down to here, we knew we were around these lows, reasonable entry long there. Right here, the next day, once this trend is established, pull back to here, buy it. Pull back anywhere down to here, anywhere in this range, like we're only 20 cents, 10 cents off of here, buy it. Very, very great entry for calls. Again, we push up here, the pullback to the trend, buy it. Again, within a 20, 15 cent pullback to the trend, buy it. These are all reasonable entries. And so you don't see a tight bull channel like this very often on longer time frames. You'll see them more frequently in the shorter time frames, on those 5, 15 minutes, sometimes even hourlies. You'll see this kind of movement on those. But what we want to do as traders is, when we see something like this is the type of trade that, and shout out Toasty for, I think he called him early. I think he might have been getting in there around that 58 area. This is the type of trade where you get in. You want to be in this trade. When you have a setup like this, even though we're pushing to the top of that range, everything in the market is telling you this thing wants to push. And with our trend, we're getting entries that work well. This is a great one to show why we wait for pullbacks. And I'm going to remove this range and just kind of do a little show you the demonstration of why you want to enter here. And I teach this all the time when I do one-on-ones with people, when I do, any just private helping in DMs, anything like that. That one of the main rules I teach people is you do not buy calls on the tops of big green candles, and you do not buy puts on the bottoms of big red candles. And so why do we do that? Because we know we have a trend going here. People who swung got smoked. The people who waited for the trend made good money and can be trimming at these people's entry. Same here, this is a nice bullish continuation candle. The people who are buying the close on that day end up losing money off the open. This takes a little bit of a gap down and then sells. The people who wait for this entry down by the trend, again, making money at the swingers entries. And it does it over and over again, closes up here, you buy this and we're opening down here the next day. You don't buy the highs, you buy the lows. And when Flips and I talk about that, it is almost always involving trends or support and resistance. You don't want to buy the top of the breakout candle. You want to buy the pullback of the next candle. And so SHOP is this wonderful example of it gave entry every day, day after day, that made you make more money waiting for the dip the next day as opposed to swinging. And you can see, even close here, open here, sell off for another entry. Like this thing was just, and again, any swingers end up gapping down a little bit, giving you the better entry. So SHOP was just undefeated in the tight bull channel, beautiful uptrend. You don't see those kinds of things very often. And so that was why, like I said, I don't trade SHOP often. It is one that I think long-term has awesome potential. But you don't see a more perfect chart than this for just buying calls every dip, buy the dip every single time. So that's our long time frame analysis. We're just going to do these couple. Now we're going to go into shorter time frame things. We're going to start with SPY because it's one that I trade all the time. And everybody in here trades SPY a lot. We all trade SPY, we all trade QQQ. We trade these like nice fast movers that respect levels, trade, of course, news days and stuff, if you don't pay attention to news, you get smoked, but you follow the news a little bit, you trade some technicals, and you can be very successful trading these things. So first thing we always want to do when analyzing any trend, we want to zoom out and look at the market. SPY is in an uptrend. SPY has been in an uptrend for a very long time now. Very few pullbacks. We have, one nice substantial pullback. This one was decent. Don't get me wrong. It was pushing 10%. But for the most part, extremely strong pullback. So we should be in dip buying mode. Zoom into the slightly shorter time frame. Take note of any of these, longer term trends that we have. Anything on the upside, anything on the downside. Are we breaking out of things? Do we have any sort of, I don't trade patterns. I don't like named patterns. I like to think of everything as trends. Is there anything giving us information that we can, should we be long? Should we be short? Obviously, we're strong uptrend. We're attempting to break out of even this upper trend here. So we should, on the back of strong data, a hawkish, though upbeat Fed, or not hawkish, but more hawkish Fed, still sounding pretty upbeat though. So now we know we're going into most days looking for dips to buy. And so how we're going to do this today, we're just going to look at these last couple of days. Obviously, big gap up day. What are some things, what are some trades that we can watch for? Anything like that. We obviously had, we had one nice move, for FOMC, but nothing too insane. That real move came off the back of that CPI report. But so what are some things we could have watched for, as I tell people, on FOMC day, you always want to be very careful once the report starts. However, leading into the report, it almost always respects levels perfectly. It does what it's supposed to do as big money starts to position a bit, And so for me, what I watched on FOMC day, and this is, not part of this lecture, so we aren't really going to talk about it. Main thing I did, fib extension. because we have no levels up here. So I need some levels up here. That's all I can work with, you know? So for me, there is more major fibs, things like that on, you know, the daily time frames from some of those swing highs and lows. But for me, I need the levels. We're going into a day in uncharted territory on the back of a, you know, big old $4 rip or whatever it was on SPY, $5 rip. So I get my levels and then I wait for a trend to form. So when we came into FOMC day, obviously nice, as we discussed, nice big move off the open or, you know, right before the open. And then we get to trading. And so the first thing that I watched for was any sort of trend to form. And, you know, we had a nice push off the open. If you caught that, great. You know, if you didn't, what I waited for was this trend to form. And we pushed up. I didn't take any entries here, I don't believe. To me, this trend broke. So that's my entry short. And this is where I did. I took a short on that day. We know, you know, again, they're fib levels based on one candle. So they aren't going to be these just unbelievable, unbeatable levels. But we had a trend. We had support break. And so this is going to go. I don't remember who was asking the question, BKP. So we can kind of talk about this. You know, we have our trend line. We drew our trend line because, you know, this was our lower high. Obviously, we could have drawn this one, caught a little short, but this ended up being the major trend. So that's where I personally drew it. So when we think of these trends as support or resistance that are angled, we have to look at it as we're going up, you know, we are testing support here. We're now breaking above resistance. So this level has now become support. Trend remains supportive. We keep pushing up. We do it again. This is the first pullback that I would have had an opportunity to enter on this trend. And it where this candle was closing, and you know, this isn't something that always works, but we knew the next candle was going to be opening outside of that trend. So the trend had the potential to be broken. So we also broke below this level and closed below it. And a 38.2 fib is pretty big, a 50 fib's even bigger. But I took the short on the bounce as close to the trend as I could get, only targeting this level at first. And so what this shows us is support, the trend and the levels have now broken and become resistance. So we have resistance here. We have resistance from the trend. It offers us a nice, you know, entry short with stops above there. Very, very tight stop. Again, targeting this next level. I think all I did was take it for a scalp. Next thing that we want to look for is any sort of other trend forming. And so as with all trends, we wait for a lower high and we go from high to high to lower high. Really, the only other trade that was offered off of this trend was right after it broke. You could have caught a nice little short. However, we see here the consolidation begins leading into FOMC. We did get a breakout, but you know, God, that was running right up into the meeting. You could have scalped some calls there. But not enough, you know, volume, not enough interest for me to have any entry besides the short here. So this is where intraday trends and daily trends differ a lot more dramatically. They can change. The trend changes intraday almost every day. You know, maybe it's a 3 or 4 candle uptrend that breaks downside, or maybe it's a 3 or 4 candle, 10 candle downtrend that breaks upside. But those intraday trends will change. When you look at those daily time frame trends, they are strong. They are much more important levels. A change of trend takes a lot of effort on a long time frame. On a daily time frame, or I mean on an intraday time frame, those 5 minutes, those trends can break very, very easily. So we're going to talk again, SPY right here. And then this will be the last one we'll talk. And then I'm going to open it up to questions, see if anybody's, you know, make sure everybody's understanding. So SPY today. Very different. You know, we had the big buy off the data this morning, but then we really just couldn't push up to it. So this is a trend that, you know, I always teach people about these. And, you know, some people like it, some people hate it. It is a high risk trade, but it can be a very rewarding trade. And it's something that both me and Flips do all the time. We've been teaching people it for months. Look at any of these pre-market trends. It's important to understand they're happening on little to no volume. Like obviously we have a big spike here, 275,000 volume, but for the most part, like we got some like 8,000 volume candles on SPY, very, very low, but they're always worth noting. And so I'm actually going to remove these moving averages for us. And so when we look at this chart, it is giving up that intraday trend early. So we want to be looking short. To me, this is a weird one where I personally started my trend this morning right here. And this is what I looked for. This is similar to what we saw on SHOP, but the opposite. This is a tight bear channel to the downside. And so we want to treat it the exact same way as you would on the long time frame, but trade it on the shorter time frame. So any bounces to within some sense of this trend are worth a short. Obviously, this one ended up being the really nice one. We had high, lower high, lower high, another lower high. This anywhere in here is your short entry. We do have support right there. So obviously it can bounce you. Your stop is tight. It's above the trend. It's above these candles. You're risking 20, 30 cents of upside against it. Again, we want to come down here and then push back up. This is a tricky one. Reasonable short here. However, I know I said I don't like them as much on the longer time frames. I will almost always draw the lower trend here when we're trading intraday, because with the volatility we have in the market, with some of those other factors that I like to trade, the opening range, things like that, you can start to look for reversals off of lower trends or upper trends. We caught the reversal here. Well, when we're pushing down and all of a sudden we start seeing buyers, to me, this is a trend I have interest in. And so this is actually something that I did alert in my tab this morning. And I was a candle early. But I'm gonna talk about it, and I'm just gonna put it on here just because it was there, just so we have the full idea. So opening range right here. I took some SPY calls right here. We also had we have some big levels right here. We aren't talking about those for now. I took SPY calls here, knowing that the most I was going to be risking was going to be about $6, $7, because I did not expect this level to break, and because it's the opening range. We know that 8 out of 10 times does not break. So we take the stab here. One candle gets a little ugly. You could have taken your stop out. I think it ended up being about a $4 risk right there. Perfectly reasonable stop out. However, this bounce is the one that I ended up trimming on the top, somewhere up here, paid a little bit more, but ultimately provided the better entry. And why is this the better entry? We're talking trends here. Why did this one end up being the better entry? Well, one, I was early. So as everybody knows my feelings on early, if you're early, you're wrong. So you admit it. And, if you get saved on your nice trade, then you get out. This right here is the better entry because we've broken trend. We're now coming down and retesting it after, touch, 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 touch. We've had so many tests on this top trend that is when, statistically speaking, we start looking for the bounce. So I was early, I was wrong. It worked out for us in the end. I was wrong for one candle, but it worked out for us in the end. This offers the much better entry. And why is that? We have trend break. Then you could even bought this one, but this is where intraday trends can be really cool, and kind of clue you into some things happening early. We know a trend happens from lower highs, higher lows, whatever it is. So that's what we actually have occurring down here. If we move this trend or we remove this trend, now we suddenly have an uptrend. That's it. That is our first sign of real reversal going on here. A low to instantly setting a higher low. These ones, consolidation. This one is low to higher low with reversal candle. Offers a very, very great entry. You have the trend off of this candle and this candle. So this pullback is buyable. Stops below the trend or hard stop down here for, you know, $5-6 risk to catch that nice move to the upside. Then again, if you want to take the bounce on this trend, you can short it here. And make money all over the place, all with very, very tight stops. You know, we have a couple levels on here. And then obviously I'll show you guys what else I was talking about, just because it makes sense. We're gonna remove these. If we look over here, this is FOMC day right here. This is where the opening range is. This was the lows off of FOMC. So we're just going to use, you know, my 40, 30. We're just going to use the opening range as the top of it. And then we're going to come way over here and we're going to go to right here. Here is those FOMC lows. So we know we're very, very comfortable buying calls here. You know, we saw this candle even in my tab. You know, I was gonna say you can stop out if you want, but in my mind there was exactly zero reason to be stopping out right here. So that's why I didn't say anything on this candle. In another time you would be okay, but when you have opening range and you have these serious FOMC levels, I mean, we didn't get, you know, don't get me wrong. If we come back to here, I guess I should need to be a little bit lower. But if we come back to here, it's not like we took a gigantic move off of these lows, but this is where on FOMC day, the market decided to defend. So you have to assume coming into this next day, it will be defended again. As we can see, we broke down. This is where I told people, if you want to try to take a fast short, that's the spot. Then break above. And again, we get to just look at the market and say, what are we doing? We're setting higher lows. I mean, you could even do this one. All of these are reasonable entries. Obviously, multiple touches gets riskier. All of these are reasonable entries for a long. And so now, very final part of all of this. We're going to talk about a trade. I always give this disclaimer. It's one of the things that I dislike about doing lectures. When we get to go back and we get to look at trades, we get to pretend that we do everything perfect. Frequently, that's not going to happen when the time comes. We don't, you know, will you pull the trigger? Won't you pull the trigger? Who knows? But when we get to go back and look at it, we get to pretend that everything is, you know, perfect and we're going to take these perfect entries and everything is going to work for us. So how do you manage a trade? This is going into the question of, you know, how do you hold trades longer? We all get it asked all the time. You know, my opinion on it. If you take profits or if you're in profit, you're good to go. And so we're going to talk about how to take entries on these trades, things to look for on the trades, and then how do we manage them once we're in there? And so again, you know, we know these levels. We're going to keep this chart extremely simple. A trend line and those FOMC levels. You know, we think those matter, so that's what we're going to trade around. We are watching the market. We get a nice push up, we get a pullback, and we get a little bit of buying. We know we want to be in here. We want to be long at this trend right here, bottom of those FO, and then even these are even a little bit lower. It's actually down there. You know, we're back in these FOMC levels. We're on the trend. This is where we want to get long. Obviously, as a scalper, you catch a 50-cent bounce candle, you take a trim on it. But a lot of people don't like to scalp. They like to hold longer. So how do you hold longer? Not just based on feelings. And so what I always tell people to do, and this is where we're going to get into like reading price action a little bit. What I always tell people to do is take your entry, know where your stop is. Our stops, you know, hard stop's going to be somewhere down here below the trend, below this candle low. You know, that's a nice reasonable stop for us. 30, 40 cent. You might get wicked out, but it's little risk. So you enter here, you get the nice pop up, but you hold, you know, you're looking for a little bit more. Maybe you're looking for these highs, maybe these highs over here, something like that. You're looking for a little bit more. This trend line now becomes your best friend. If we're above it, then you can very well stay in calls. So we might get this little pullback, you know, you're going to get back some profit right there, but like this candle gives us a nice breakout. So this is how I will manage these trades. This candle gives us a nice breakout. This is where your stop moves to. you move your stop loss to here because you know if this breakout candle fully fails and we go below there, the market's not actually reversing for you. So you hold it. This candle, not much of a breakout. This candle gives you a little bit of a breakout, but you want to be adjusting stops, you want to be watching volume based on these big move candles. What I do is we break up here, but we get some consolidation. My stop now gets moved to right here because I want to protect those profits. We're pushing up towards these highs. We can expect some consolidation there. Trend is still up. It's still holding the trend. But you're starting to see a little bit of faltering in the market. So I bumped that stop up. And I'm personally trimming this whole time as well. But this is, if you have one contract and you're willing to give back a little bit of profits and you want to see what the run has for you, then great. So you keep watching consolidation, holding the trend. This is not an excellent breakout candle, but it is another breakout candle. So what I do, and it's important to note we have the previous highs over here. You should be being cautious. What I do when I get this previous breakout candle here, I don't personally adjust I don't move the hard stop. We enter down here. If our stop's up here, we've caught a buck move or whatever it is, you're up 30%, 40%. You want to protect that. What I do now is I look for consolidation at places you would expect it. So it's right here. We have this consolidation here. I'm stopping on really any bearish candle close or bearish candle selling through here. Like I said, I don't want to move my stop up because, maybe I don't want to get wicked out. And so on this one, we're breaking the trend. I'm still well into profit, but I know that my mental stop loss is here now. When we get this next push up and we fail, my stop personally moves. Oops. My stop personally is moving to here. The top of that consolidation, the top of that previous highs. And this candle, one of these candles right here, once we pushed up here and we falter at, previous highs, I move my stop up. So this is where I stop out. So I move all my stops. If you ever, in my tab when I'm alerting things, I'm not giving stops, based on, I'm trying to say we're risking about $6 on these. Well, if you slap your stop loss $6 or whatever below the contract and you're on TOS, so it pops up the line for you, you'll see what I'm watching, based on a previous candle. We can look at another one real quick because SPY downtrended. We talked about the SPY downtrend today. So this is another nice one. We have our lower high set here. We short it right here. We know this is our lower high, so we short it. Breakout candle, move to consolidation points. Another breakout candle, move to the highs or break down, I should say, move to the highs, and then this is consolidation. So same as over here. When we start seeing consolidation, this is where we want to start moving our stops. Move our stop to the top of this consolidation. Obviously, if we get another push down, another breakdown, not a big candle, but a break below the consolidation, we're moving our stops to here. And we're getting stopped out on this next candle. Did the market end up selling more? Yeah, but you don't want to let it go against you this much just to get a little bit of extra profit here when you could have been selling for profit here. So I know these charts are ugly, but entry, we get the breakdown, move your stop to consolidation. We get consolidation, for one candle, another breakdown, move your stop to the tops of these candles. Another breakdown, we think, but a whole bunch of consolidation after it, we move our stops to the top of the consolidation. If we get a breakdown, move it to the bottom of the consolidation. Nice and simple, no hoping, it's very simple. Anybody can do this. Of course, if you got questions, shoot me a message, but anybody can do this. And then you won't find yourself being the person on TradeFloor saying, oh, can Apple keep going? Can NVIDIA keep going? Whatever it is, you just move your stops like this and you protect that profit the whole way. And don't adjust them, because then you start giving back more profit, and just stop out and always look for new entries. That's all we can do as traders. If we get stopped out of a trade, like, you should never complain on a trade. When you get a $2 drop on SPY in an hour, you're happy. When you get a, let's see, 240, a buck, $2 again, I mean, $1.75 again, upside move in under an hour, then you're good to go. And so to me, that's the nice, nice, easy way to manage trades. If somebody ever asks me, should I hold? Say they're in SPY calls here. And somebody asks me should I hold? And then we get the breakout, I'm gonna say move your stop to 540.50 and make sure you're trimming at those previous highs. That's what I'm always going to tell people, because that's what the chart tells us to do. Okay, well, that is it. That's the trend spiel. Let's see, I'm sure we got a couple of questions in here. And we'll go through those, and then hopefully we'll have a couple minutes for charts with you guys. Let's see. Nah, I don't do the line chart. I don't even know. I guess I probably know how to turn a line chart on, but no line charts for me. Yeah, Raphael. So I kind of answered that. Your questions about, do you go to other time frames to validate the trend? The large time frame trend, always more important than the short time frame trend. If you're seeing breakdowns on the daily and then you're seeing them intraday as well, start to look to short those bounces. If you're seeing breakouts on the daily and you're seeing a breakout on those short time frames, look to be buying those dips. VKP, again, if you're looking for that bigger picture, 4-hour and daily is it for me. I mean, I like the hourly too, but I don't like those 4-hour SMAs. I don't like any or 1-hour SMAs rather. Love the 4-hour and the daily, especially the daily. But hourly is great. It can sometimes show you like, hey, quit trading, we're consolidating, but for me, long time frame, you want that 4-hour and that daily. Opening range. Oh, Kevin answered it. Yep. First 90 minutes, highest high and lowest low of the first 90 minutes of the day. Oh, iPhone, we just did when to take profit, and this is the same thing. So if you're in multiple contracts, what I tell people to do is, okay, we enter here, stops here, we get the bounce, we get the breakout. If I'm moving my stop up, I'm taking some contracts off. We get another nice breakout, move the stop up, I'm taking some contracts off. Nice breakup here, I'm in one. I'm probably in one by here, but I trim. Anytime I move a stop, I take a trim. Raphael, yeah, EMAs are great, but they can trick you a little bit. And so that's why, this is what is on the chart. This is what the chart tells us, and so that's what I trade, and like, I can be wrong. I can read, I am wrong sometimes, I can read the charts wrong just like everybody else can. But this is what the chart tells us. Zoom out and point out the bigger trend channel on what? SPY? Exactly, Rudy. It just makes it nice. It's simple. There's no emotions, Oh, even this one, like if you're long here and you catch this move and the trend breaks and the candle closes below the trend, stop. And you're done. And you had an awesome trade. You're protecting your profit. You aren't doing, riding this, getting worried. Just take your money. If you want to buy the consolidation down here, then great, buy the consolidation down here. But yeah, trend breaks, stop out. No emotions, no nothing. Like, you made great money, so be done. Same as down here. It breaks down. Who cares? You're just a 30-cent downside move. You're good to go. Oh yeah, so good question. Your girl. So on those long time frames, that is something that I will point out. So we have these trends drawn here. If you zoom into the 5-minute, it's like, we'll put a level where it should be. They frequently 518.18, they frequently will adjust more than you, or like, they might not be exactly where you want them to be. And so that is something to take note of. See, we know that on the daily, this is where the trend is. When we zoom in on the 5-minute, it can be down here. So I recommend people take note of that. I'm happy you said that, actually, because it's something worth noting. And it's something that, like, I'm so used to it that I always take note in my head of like, if I'm looking at this daily time frame and I'm right here, I'm always going to put my mouse somewhere down, and I do want to point out, rarely are these to the cent, intraday they'll be more accurate, but rarely are these to the cent. Say, 20, 30 cents, leeway down here is just fine. But I personally always do try to remember to like, okay, 5/18/20, that's really what I'm watching. So yeah, thank you for bringing that up. iPhone, thank you. Ty, yeah, thank you. And let's get together tomorrow. Oh, coin. Should we just look at the coin chart for all Norberto? So this was actually where he was saying banger stock. Then I drew this line as a joke, and that's where we went. And then now look at us. Banger stock. Norberto. Do I use Bollinger Bands at all? Every single day, to be honest with you. Um, uh, I use them all the time. Actually, but what you're saying there, if we close above a top band, there is zero chance that I'm long, personally. SPY is actually, let me see if I remember this right. So SPY up here, you don't want to be you don't want to be hunting the longs when we're pushing at these third bands. You do not, that's not where you want to be long. You can buy some dips down to here if we're closing above these with the stop under this band. But yeah, if something that I like, a thing that I really like to tell people with bands is look at the angle that they're pointed at. If we have this, what this is really telling us, and I read Bollinger's book, what this is telling us is momentum is going to the upside. So if you're long, you can take some shorts off of these bands because, there's whatever it is, 92% or 89% probability that it won't break. And so you can take some shorts there, but if these are curling and going this way and the bottoms are blowing the other way, momentum is in your favor. So this can give you some nice confirmation to stay riding with it. And as long as we don't blow outside of it, you aren't getting into those wildly overbought conditions. Oh yeah, you see that close on T? Nice pop on that thing. Carvana. Let's see. I don't know about calls on that thing. This is the trend I would have been watching that it pretty well looks like it's just dumping here. I'd want to see it get back over that trend to catch that bounce. I mean, you could try it off this 105, I guess, but it's a little ugly. We'll see. But that thing puts in moves, huh? Uh, we can check out XOM, but basically, I mean, it's the same story as XLE, selling down to this 200 day. If you're gonna take a stab here, like kind of around here is where to do it, and then what I have here was, this was my lower high, I just did it based off of these candles. Obviously there's even a more like substantial one up here. But this is the trend that I was looking at on that, only because so many people are in this trade, you could make an argument that, it has this lower one going on as well, but somewhere down here, could have been today, would likely be the place to take a stab, but it's not looking bullish to me. And just with the oil data, it's having a hard go. But it could take a bounce here. I wouldn't be surprised to see it run up to this trend or something like that, but hard to see it getting above there. Market's not buying oil right now is all. Okay, well, I see a few people trickling out. Thank you so much for being here. I appreciate all you so much. If you got any questions, shoot me a DM. Always happy to answer them. And if not, we will catch y'all tomorrow. Trade safe Friday. Yeah, right on, everybody. Thank you, Jimmy Cherry. Yeah, thanks, everybody. Thank you all so much. Okay, have a great rest of your night, everyone. I appreciate you. Thank you. Thank you.